Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at EWOTrading.com with your Pro Trader tip of the day. What to do when things don't go the right way for you in your trade. And that's what we're going to talk about here with Nike. This is in our Delta Neutral Breakout portfolio. The trade ID is 1284, that's 1284. And this was a straddle that we did on Nike. So let's take a look at the entry here. We'll go back, and the thing about Nike is that this stock is usually pretty volatile. In fact, in our risk graph modeling here, you can take a look at the previous earnings, which is over here on the left with the green triangle and the E in the middle of it. You can see that significant gap down. The stock gap down almost $20 on earnings. This is not uncommon for Nike. Okay. And as we expected for this round, the historical movement averages out to about 11%. And so we set up a straddle to get that same type of movement and expected that same type of movement. Now, here's the thing. Usually when news comes out and there are changes within a company, that does cause a lot of volatility. So let's talk about what happened with Nike. So we get here to the earnings announcement, and we have movement. Okay. And take a look at this. The stock did gap down, and you'll notice at the time of this image, the drop here was 7%. So the estimated move was almost 12%. I think it was about 11.8%. And yet the stock only moved 7%. That did not move as much as we wanted. So as a trader, you have a decision to make. Do you take your exit at the time of this? We had a very small loss of $37. It was trading right near the lower break even of our straddle. That's indicated by these light blue lines, the horizontal light blue lines, and the dark blue line here is price. Now, here is some of the news. So if you look at the commentary here, not only did they miss, but they withdrew future guidance and they had a CEO change. You would expect that all this news and change and instability in the company would lead to a big move in the stock, but it didn't. So what do you do as a trader? You have a decision to make. What's your prognosis? Well, when you have an earnings miss and you have withdrawal of guidance, that's usually pretty bearish for a stock. So we would think, at least we did, that the stock would move down. All right, so let's take a look at the exit that we just sent out this morning for our traders. And sure enough, we did get a little movement down. In fact, it bounced off of $80 a share. We did have a nice little win on this trade, but all of a sudden today, the stock rallies 1.6% in early morning trade. And with only 2 days left to expiration, we needed to go ahead and take profits or exit the trade without adding to losses. Okay? Because if the stock rallied up, that would head back to the middle of our straddle, and that's no good for this type of strategy. So the exit alert went out, and as you can see, it was a small win of about $20. So this is evident of when things don't go correctly and you can still scratch out a win, a small win. Hey, this covers commissions, maybe even sticks a few dollars in your pocket. Again, this was a profit of $19 per spread. So if you did a 3 or 5 or 10, obviously there's going to be a little bigger win there. But again, this is just a 2.8% return on risk in 9 days, I think it was. And we like better, but when you can scratch out a win, when things don't go your way, that's part of being a good trader and having a good system. So that's your pro trader tip of the day. When things don't go your way, make your prognosis, stick with your plan, execute your plan, and you'll come out on top in the end. Everyone have a great trading week. We'll talk to you again soon.